Okay, cool. Here we go, family. Peace and blessings. Welcome to Day Trading School. We're in second grade now. So in this session, we're going to be talking a lot about time. We just got finished talking about space. And space and time, of course, are like the foundation of the world that we live in. And it's actually the foundation of the charts that we trade on as well. So today we're going to talk about market hours because there's different hours that different markets are open, but also more active. And then also we're going to talk about those different time zones that will help us recognize when to trade which currency pairs. And then also time frames. Okay. And we'll talk more about what that means here in a couple of seconds, but it's going to help you out so much more to let you know how long you should be in a trade, how far back you should be looking on the chart. Okay. So let's go ahead and get started. I'm going to jump into it first, talk a little bit about time frames, okay, before we actually show you more about time frames. Okay, so Forex, and then same thing with stocks, same thing with options and futures and cryptocurrency trading. It says Forex, but believe me, this applies to all of them. There's a couple different type of times that you can trade on. So I'm going to show you here on the chart in a second that you can be a long-term trader, a medium-term trader, a short-term trader, or a very, very, very short-term trader, which is what we call a scalper. Long-term trading means that you're looking at trends on the weekly time frame or daily. So you're looking at like, what was the past week? What was the week before that? What happened the week before that? What happened 6 weeks ago, 7 weeks ago? You may be looking at the past 52 weeks, the past 100 weeks to see what your next trade is going to look like. And you're probably going to be in that trade for a couple weeks, a few weeks. You know, we just don't know. It depends on what your setup looks like. But it's all based around weekly and daily kind of analysis. So I'm going to show you how to change your chart to show you weekly data and daily data opposed to minute data. Okay, the medium term, that's someone who more so called a swing trader. In the long term, remember, we call that a position trader, and that is because you're full blown on like, what is the current trend? What's the main trend? And that's the only thing that I'm looking at is like, what is the trend long term? And I'm going to just ride that thing long term. Medium is like, it's a swing trader. So you get a little bit more flexibility and you may just be trying to see what kind of money you can make in between today and tomorrow. Okay. Like you may know that the overall trend is an uptrend, but right now it's coming down and you may think that it's going to go down for the next 12 to 24 hours. And if that's the case, then you can make some money. So as a medium term trader, a swing trader, you're looking at the daily time frame to see what the overall trend is, and then a 4-hour time frame to see where you should jump in at and where you should get out at. The 4-hour time frame just means every single candle or every single bar represents 4 hours. So it's going to jump by fours. It's going to say 12 o'clock, and then we're going to see what happens in between 12, let's say a.m. and 4 a.m. And then we're going to watch and see what happens between 4 a.m. and 8 a.m. and then between 8 a.m. and 12 p.m. and then 12 p.m. and 4 p.m. So you're looking at what happens every 4 hours. Okay, that's more of a medium term trader. Now, short term is somebody who's looking like every single hour, what's happening. You're looking for trading opportunities every single hour, right? That's a day trader. Okay, that's day trading. That's a lot of what we do. Okay, we do a lot of swing trading as well because you just never know. So we are in between at Unlock Academy. A lot of what we've been teaching for the last year and some change has been more so around day trading and swing trading. And now we're getting into some scalping too, which we'll talk about soon. But day trading, you're looking at like what's happening today. What opportunities can I take advantage of today? What happened yesterday, the day before yesterday? Like maybe you may go back like a week and determine what kind of trades you want to jump in based on like a week's worth of data, maybe 3 days worth of data. Okay. And then you jump into the markets. And then you'll probably stay in that trade for a couple hours. Sometimes if you jump in at the right time, you may only be in there for a couple minutes. You might get your money, get out, because you might have jumped in at the right time. You got the momentum, it moved in your direction. You're up 1% on a trade. You can get out the way. Okay, so that's best case scenario. Okay. So that's short-term trading, and then we can get into scalping. And scalping is for those people who like to get in and get out really quick. You may be looking back at like what happened over the last 24 to 48 hours, and you're trying to take advantage of what's happening right now. So you may have seen a breakout, and then you've seen a pullback, and then it looks like it's about to break out again, and you want to jump in as soon as it breaks out again, get that money, and then get out the way. Or you may see a small trend building over the last 2 hours, and you want to wait for that trend line to break, jump in, and then get out. So that's a scalper. A lot of money can be made with scalping, but you also can lose a lot more because you jump into more trades. But it does, if you know what you're doing, if you have a great setup, you have a great strategy, scalpers make a lot of money. And right now we're in a scalpers market because we're on the brink of a recession. There's a huge war going on right now. We're on the verge of, a pandemic, another pandemic maybe, and we just don't know what to think. I heard President Biden say something about we got to be prepared for the next pandemic. It's going to be another one. So when you hear stuff like that, we got to be like, uh-oh, what is these people doing? What's about to happen? Here we go. So with that being said, that doesn't mean stay out the markets. It's just about changing up the strategy a little bit. Okay. So that's what we're doing right now. Learning more about how to operate within a recessionary kind of market. Okay. Now, if this made sense to you, if you got a little better idea about like the different types of trading styles, just do me a favor and type unlock in the chats. We got the long term, medium term, short term, and then we can call it scalper. Sometimes I call it minor term, just like really, really small time frames, looking at quick entry positions. Cool. Thanks, everybody. Thanks for being attentive. Appreciate y'all. Okay. Now, before we're going to get back into time frames, I'm going to show you what time frames look like on a chart, how to change my chart here in a second. But first, I want to talk a little bit more about the times to trade, the time of the day to trade. Okay. So let's talk about market hours. All right. Is the market open? What's the best time to trade? And it all depends on which market you're trying to trade, right? If you're trying to trade US stocks, then you probably want to be trading in the New York session. If you want to trade Europe stocks, then you probably want to trade in the London session. Okay. If you want to trade, say, the USD JPY pair, you may want to trade around a New York session. And a little bit, maybe you could trade too as well in the Tokyo session as well. Tokyo is the Japanese yen, Sydney session, Japanese yen, and you see a lot of activity around that time. Okay. These markets operate in multiple time zones. Forex market operates in so many, like the stock market, US stock market only operates in New York session. So you don't get much there. And most markets though are closed on the weekends. Only markets that's really open on the weekend is the crypto market. Okay. Even Forex closes on all of Saturday and most of Sunday. Actually, if New York State is the whole Sunday technically, but at 5 p.m., the market opens back up because the Sydney market is open. Okay, that's the Australia market. Sydney is in Australia. Okay, Tokyo opens up as like 7 p.m., but the problem is there's not a lot of Europe and US investors in the market just yet. So even though it opens at 5 p.m., there's not a lot of volume in the market. There's not a lot of people buying and selling. Okay, people start buying and selling a little bit more around 3 a.m. when the London session opens up. Let me see where I'm at. Oh yeah, 3 a.m. here. Down here at the bottom is EST. At the top is UTC. So try to be on point about that. 5 p.m. and then I said 3 a.m. is when the London session opens up and you start seeing a lot of volume then. But as you see, most of the volume comes around 7, 8 a.m. going to like 12, 1 p.m. This is like the most active time in the markets. Okay. So I just want you to let your eyes sit on this for a second. If you have any questions, be sure to type them below or reach out in our community later on. Okay. Yes, 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 yes. Okay. I'm going to show you one more thing. They got to do with these market hours. Check this out. So I'm going to help you out here. So this right here is on babypips.com/tools/forex-markets-hours. Okay. And I like this because it shows us like how much volume is in the market certain times of the day. So around, what is this? EST time, let's see, in New York right here. So around 5 p.m. Eastern time when the market first opens, the Sydney session opens up, the New York session closes, and we start seeing a lot of volume in the markets. Okay. A lot of, we don't see much volume in the markets around here. Okay, at the bottom, as you see, it says the market is kind of low. The volume is low over here around this time. The volume really starts to pick up around 3 in the morning. Like I said, that's around the London session opening up. You get a lot of volume, but the most volume starts to hit around the US session around noon is when it peaks, and then it starts to go back down. So between 8 and 12 is really when you can try to make a lot of your trades. But I see a lot of volume around 3 a.m., 4 a.m. in the morning, a lot of volume. Sabrina asks, what are the currencies that go with the time frames? Again, great question. So what you would want to look at is, let's say we have a currency like the US dollar JPY. So that pair is going to be active during 2 different sessions, the New York session and the Tokyo session. That's when that pair is going to be the most active. So that would mean anywhere around this time, right? 7 to 12. But then for the Tokyo session, it will be probably anywhere around here. I would say around this time when you got the London market opening up and the Tokyo session is already open. So around 2 in the morning. So I would say USD JPY is the best to trade from anywhere from like 2, 3 in the morning. You can even get in a little bit earlier. Sometimes you might find some setups like because the Japanese market is open. So if there's a lot of Japanese investors in the market or there's some big news come out, then you can capitalize on that news. Okay, remember the news impacts the market in a major way. So if the news impacts the Tokyo session, if some news, like we might be chilling, watching a show at night or eating dinner, or at a movie or something like that. It's 8, 9 o'clock at night over here for us. But for the Tokyo, it's really early. It's 8, 9 o'clock in the morning for them. So their businesses are opening up, their banks are opening up, their hedge funds are trading. So if some news comes out, then it can affect the markets. So if you trade in USD JPY, you can jump into a trade. Okay, you may see some volume, you may see an opportunity. So the US dollar the USD JPY can be traded anywhere from, let's say 8 p.m. Eastern time, all the way to 5 p.m. the next day. So 8 p.m. Eastern time, all the way until 5 p.m. the next day is the typical hours. Now, that doesn't mean it's going to be the most volume, but those are the typical hours. Let's think of another pair. Let's say we say GU, the British pound versus the Japan versus the US dollar. That will be anywhere from 3 a.m. That's when the London session opens to 5 p.m. Right? But the most volume may, of course, be anywhere from 3 a.m. to let's say about 4 p.m. Okay. So you look at which pair that you're currently on. If you're saying the New Zealand dollar versus US dollar, New Zealand dollar is classified in the Sydney session, right? Because the New Zealand is near Australia as well. So when the Sydney session opens up, that's when we might start seeing some activity with the New Zealand dollar. So when the New Zealand dollar changes, it might affect the US dollar. So NU is a pair you may be trading. You got to be careful to see. That's why I always go back to that website I showed you guys in the last session, forexfactory.com or any other news website, to try to check out what news is happening currently in Sydney, right? What's happening currently in Japan? Is it going to affect any trades that I have in or trades that I plan to jump in? Okay. So just go off of whatever pair, the country you're looking at, and then when does that open up? Okay. We got the Japanese yen, all of those. We got to look at the Tokyo session. And then also we have the euro, that's with the London session. So euro JPY, euro USD. The Canadian dollar, that's a part of the New York session because they're on the same time frame as us. So Canadian JPY, Canadian USD, all of those are probably traded more near the New York session and London session. You know, so you'll get used to it as you go along, but I just want you to get your mind wrapped around these markets open at different time, and the market is open 24/7, but at the same time, there's a certain moment when there's more volume in the market. There's more volume in the market at certain times, okay? So I'm gonna go over here and I wanted to show you, I'm going to talk about this in a second. In TradingView, tools of the trade, we talk about there's a feature where you can break down different time zones, right? Different time zones. If I go to the 1 hour time frame, which we're about to talk about, look at this. You see these blue lines that just popped up? Each one of those represents the start or close of a day. So right now, this blue line right here, make sure I know you're seeing that. This line right here was the close, right? This was the close of this whole day. So this whole trading day, the market closed, okay? And now this day right here is open. This is currently open right now. So this is what's currently being traded right now, okay? Is the market really just that flat, or is it just the way I got my angle? Let me see. Okay, it looked real flat. I was like, whoa, ain't nothing happening in the market. Okay, that looks better. Okay. So let me know, does that make sense? Do you see that? If you have a question, let me know. But this represents one trading day. This represents one trading day. Okay, this represents one trading day. But if I go up to the daily time frame, as you'll see, those don't show up anymore. It's no dots because every one of these represents one day. This is one day, this is one day, this is one day, it's not going to show you the day separation because if I change the candlesticks, each one of these candlesticks just represents one day. Okay, this is 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days, 8 days, 9 days, 10 days, 11, 12. So this is the last 12 days worth of data. Okay, this is 12 days worth of data right here. Okay. Now, to add those session breaks, that's what we call them, so you can know when the session opens and closes. You go down here to this little gear icon at the bottom of the screen. Click that, and then you click on session breaks. There's going to be a button right here that says session breaks. You just click that, and as long as it's checked, it'll show you these here. Okay. All right, now let me find my notes I just had here. Here it goes. Okay, so remember we talked about long-term position, mid-term, short-term, and scalper. Okay, so long-term is position trader, and they're looking at the weekly or daily time frame. So check this out. This right here is the daily time frame. This goes from July 1st, 2021 to the current date right now, June 30th, 2022. I'll go to the weekly, right? Look, it looks about the same amount of line, right? But this one actually goes way back to August 2017. Look at the bottom of our screen on our x-axis. You see it goes way back to August 2017. So overall, since August 2017, on a weekly time frame, if you would be a position trader, then you would say, okay, I'm bullish. I'm long-term buying on this, which is the USD JPY. I'm long-term thinking that this is going to continue to go up because, as you see, it's been going up since 2017. It had a little bit of what we call consolidation for a little bit, but it's been going up since 2017. On the daily time frame, same thing. It looks like it's been going up for a while. So at the top of here is where you change the time frames. Every time you change one of those, let me go to candlesticks for a hot second. Every time you change one of those, it changes what each one of these candlesticks is worth. So now it's letting you know that this candlesticks is 1 day, the current day. This is yesterday. This was 2 days ago, June 27th. This was 3 days ago, June 20th. Oh, actually, this is 5 days ago because it's not going to count Sunday and Saturday. So it's going back to Friday. This was Thursday. This was Wednesday. This was Tuesday. This is last Monday. Okay. So it shows you all of every single day. Now, when I go down to, let's say, the 4-hour time frame, this is for the people who are more midterm traders. Each one of these now represent 4 hours. So this is today from 9 a.m. to, let's say, 1 p.m. This is also today, but it was from 5 a.m. to 9 p.m. So this represents 4 hours worth of data. So within these 4 hours, the price went up. We got a green candle. Let me go to the line graph, as you see, right? In between these two spots right here is 4 hours worth of data. And as we see, it went up. The previous 4 hours is here from 2100 hours, which is 12/8, what's that, 9 o'clock, 9 p.m. to 1 a.m. Okay, and that's what happens. Every time we go back one notch, it represents 4 hours. Okay. So that was 4 hours worth of data. Then this is the 1 hour. So every time we go back one, it represents 1 hour worth of data, 8 o'clock, 7 o'clock, 6 o'clock, 5 o'clock, 4 o'clock. Okay. Then we got the 30-minute. You can go down every 30 minutes. So for 30 minutes, remember what we said. That's going to be more so in that 15-minute to hourly range. So this is for the scalpers. So now at this point right here, we're looking for short trading positions. So for example, if I was to trade this market right here, I would have seen a trend that was building up. If I wanted to scalp this on a daily time frame, I would have been like, actually, all I really needed was this. This is scalping. I would have just looked at, let's say I look at these 2 days worth of data. So I'm going to highlight just 2 days worth of data, maybe 3. Let's call it 3 days. Okay, 3 days worth of data right here. 1, 2, 3. Okay. If you don't see that, let me know in the chat and I can help you see it. And then what I would say is, I'm a scalper, so I'm looking for a trading opportunity. So I will be looking for like a trend line break. All right, trend line break. I'll show you how to do that later on when we get to, I think it's third grade. I think it's third grade when we start talking about lines, geometry. Okay, shapes and things like that. So yeah, I would just be waiting for this line to cross. Once that line crosses, boom, it comes down and we will ride that all the way down. So you would make money from this point all the way down to here. Okay. So for us, that would have been 134.48, 131. Wow, that would have been 275 pips. That's actually a lot. It's actually a whole lot. Wow. That could have been $274, or that could have been $2,700, or that could have been $27,000. It depends on how much money you invested, how much you leveraged. But yeah, that would have been a great trade right there. Or you could have just been scalping and just stayed in that trade for a couple hours and got out 71 pips, 74 pips, still a great amount of money. Still, if you would have just got in and out, as soon as it crossed that line, you got in and got out right here before the session closed, because you see the session is closing here. As a scalper, you don't really like to be in a trade until the next day, because as soon as the market goes from one session to the next, as soon as the day closes and it's 5 p.m. Eastern time, what happens is your broker is going to charge you a financing fee. And it's okay, the fee isn't huge, but if you're a scalper, you may not want to pay that fee. The fee can be based on how big your position size is. So it could be $10, it could be $100. It just depends. But as a scalper, you like, man, I just want to get in and out. I don't want anybody to take a fee. So you could have just got out right here at this point. You know, and then the next day you jump back in again when you find a new opportunity. So here's another example. This market is going down this whole day, right? This whole day, this market was just going down, right? So we don't trade this day. We wait for this trend line to cross, and then boom, right here, that trend line crossed. This area right here, as soon as that cross happens, now we jump into the trade. And now we will ride this up from here, and we're scalping and we just want to be in and out by the day. So we might get out right here. That's 160 pips, 160 pips though. We could have kept riding it up. As a day trader, you might have rolled this all the way up here. That's 269 pips. Okay. Any questions? Then we want to be really scalpers. We can go down to the 5-minute, 15-minute, and we'll see a lot more opportunities even here. So in the smaller the time frame, the more movement you get, the more volatility, but that means the quicker you got to be. So if you want a 1-minute, 5-minute, 15-minute, 30-minute time frame, if I were you, I would think of it like this. If I get in on if I'm looking at the 1-minute or 5-minute time frame, I'm probably going to get in this trade, and I'm going to be in this trade for about 5 minutes to an hour. Okay. I usually like the 5 exit. So if I'm on let's say the 5-minute time frame, okay, I'll do 5 minutes times 5, which equals 25 minutes. Okay. That's on the low end. I'm probably going to be in this trade for about 25 minutes. On the higher end, 5 minutes times 10. Okay, just 10 exit. So I might be in this trade for about 50 minutes. So as you can see, I'm probably only going to be in this trade for about an hour. Okay. Probably only going to be in this trade for about an hour. Now, if I'm on a 15-minute time frame, I'll do that same thing. 15 minutes times 5. This means you're looking at setups. You're looking for trading opportunities on a 15-minute time frame. You're probably going to be in it for, what is this, like 75 minutes? Okay, that's almost an hour and a half. And you up to 10 minutes. I mean, 10 exit. I'll probably be in it for about 150 minutes, which is 2 hours, almost 3 hours, somewhere in that range. Okay. Now let's say we were on the 1 hour time frame. 1 hour times 5, we'd probably be in this trade for about 5 hours. And that makes sense, right? Because we're doing day trading, and day trading is usually about 24-hour period. So you may be in it for anywhere from 5 hours to 1 hour times 10 equals 10 hours. Okay, so you're gonna be in that, this out of this 24-hour day, you may be in this trade for about 5 hours, 10 hours, somewhere in that range. You're not gonna be in it the complete day. You're not gonna get in at 5 p.m. and then stay in until 5 p.m. the next day. No, you're gonna find that nice amount of time. You're gonna find that nice pocket. Let's see, I'm gonna go up to 1 hour time frame and show you. Let me go to one that we didn't do yet. So I like this right here. So this is one of our strategies we call a trap house breakout. So let's say I did my analysis and I seen that, let's say we're trading in today, we're over here trading right now. We're in this market today, but we look back over here at this market. Okay, we look back and see what was happening these last 2 days. Okay, so we draw our box and we say, you know what, the market has been stuck in this area. It's not really trending. Okay, it's not trending. It keeps going up here, going down, up here, down, up. And then we wait. So this is now where the strategy comes. We call it the trap house breakout. This right here is a trap. Okay, I call this the trap. Okay, because the market is just stuck in this area. It's not moving out of here. If you can see that, type unlock. If you can see how the price is stuck in between this box, type unlock for me. And we're going to talk more about strategy later on. I just want you to see this early on so you can know how to trade these time frames. Okay. Thank you. Thank you. So yeah, it's stuck in here. It's not moving out, but eventually it's going to break out. And it's either going to break out to the bottom, which we call a floor breakout, because at a house, you know, you have a floor and a ceiling. So it's either going to break out down here or it's going to break out the ceiling. Okay. So in this situation, did it break out the floor or break out the ceiling? Type in the chat if it broke out the floor or broke out the ceiling. Yes, yes. Yes, yes. There we go. Yes, exactly. So if you can identify a box, if you can identify the price being stuck in a box in our trap house, not all you gotta do, I'm not gonna make it seem like it's that simple. You just gotta wait for it to break out. But that is what we do. We wait for that breakout. Then we make sure some other confirmations are there. Is the time of day right? So far, so on. So on a 1 hour time frame now, I might only be in this trade from here, once that breakout happened out that ceiling, to here. So let me see, let me just do 5 hours. One, I got in at 7 o'clock, 8, 9, 10, 11, 12. Look at that. So boom, that's it. So we in this market from here to here, and then we out. And then look, it did pull back a little bit too. So you probably would have been like, oh shoot. And then look, it's right after that 5 hours, it came down. That might be coincidental, but that proves the point that I'm trying to say is that we're going to be in this market. It's shot up, come down, and then you probably can jump in again. So there's two different opportunities here. You as a day trader, you might have made that money. Somebody else might have made this money, right? These are two different trading opportunities. Or you could have just, as a midterm investor, a swing trader, you might have traded both. You might have just stayed in a trade the whole day, okay? But those are our trading opportunities. So that's time frame trading. Okay, so you'll get used to this as we go along, and you'll get used to it. I would love for you to watch this video 2 or 3 times and practice it. Go over these charts, okay? Go back and actually go and look at everything on the 1 hour time frame, and just look for trading opportunities. Just look for trends, right? Look for boxes. And you don't have to right now, you don't have to stress yourself about, I don't know how to draw the box, because I know it's still early for you, but I just want you to get used to seeing like, whoa, look how the market goes from this right here, this consolidation, where nothing is happening, to it's shot up. You know, the difference in those situations. Nothing is happening here. It's kind of just bouncing in this area, to it fell out the trap. Okay. Any questions? Any questions, tribe? Yeah. So once again, if you're on a weekly time frame, you're probably not going to get as many trades in a year as somebody who's trading on the 1 or 5 minute or 15-minute time frame. The 1 minute, 5 minute, 15-minute time frame, you may trade, what is it, 200 something trading days in a year. You may trade 150 times in a whole year. Whereas a weekly trader may only trade 3 or 4 times. They may put in 3 trades. That's it. They're going to run those trades. They're going to run a long time. That's it. A day somebody who's trading scalping or day trading, they may trade anywhere from 100 to 300 times, especially if they're trading multiple different financial instruments. They trade in USD JPY, and they trade in Bitcoin, and they trade in the euro versus USD. Okay. Would you look at a different pair every day to analyze, or choose one and let that be the focus to start? Great question, Nicole. I always suggest focusing on one. I always suggest that. And then you'll be able to add another one to your repertoire as you go along. But yeah, if you could focus on one pair just to watch how a market moves, you'll get used to it. And then you'll be able to apply that to all the rest of them. But just get used to how this market moves. You'll see so many trading opportunities. Look, it's always a market, a new trend being built. All right, so this trend line was going down. It broke that trend line, and now we can ride it up. Okay, this one is about to ride up. And then when it crashes that, when it breaks that, we can ride it back down. Okay, and you'll get used to the rhythm that the market that you're watching has. And that's what you want to do. You want to get into a rhythm with it. And I see people make a ton of money off of focusing on just one pair or trading just one stock, one crypto, because you find all of the setups for that one. Okay, that's all I got for y'all today. Hope this was a learning session for you. I really, really do. If you need anything else, you already know, reach out to us in the community. Be sure to join the onboarding sessions so that way you can get set up with your signals. Make sure to join the daily hypo to just get a better idea of how to read these markets. If you need anything else, reach out. Appreciate y'all. Congratulations on making it to 2nd grade. I'll see you in 3rd grade. Peace. Unlock.